I do love that intro reel. So GM, GA or GE, depending on where you are in the world, and welcome to another Coin Bureau trading live stream. Now, I know what you guys are thinking. Who the hell are these two guys over here? We are here for some of that Moonin Papa Alpha. Well, of course, we are the hosts of Coin Bureau. I'm Nick, and of course, joined by Guy. Guy, how you doing, man?
I'm well, thanks, Nick. I'm well. Great to be doing another one of these. I've been looking forward to this. This is going to be a nice way to wrap up my week.
Damn straight. So guys, obviously, as you know, the goal of me and Guy jumping onto the Coin Bureau trading stream is to learn from our pro traders like Aaron and Dan and of course Mariano. And of course, we'd also like to put out an appeal to those of you who are personally pro traders yourselves, streamers or YouTubers, or just crypto fanatics. If you would like to join one of our live streams with one of our pro traders, we would love to hear from you. So we will leave a link to our the Twitter and contact of our head of partnerships and COO Raheem down in the pinned comments. And it's not just trading. Obviously, if you guys want to collab with us in general from any angle as a YouTuber or content creator, we're always looking for new talent as well as people who share our vision and mission for crypto education more broadly. So with that spiel out of the way, I would like to quickly kick over to Guy, who's got the most pressing, burning question we've been thinking about for months, and we just need to get the answer to.
Absolutely. Thanks, Nick. Aaron, I really want to know, why Moonin Papa? What is the origin story of that name?
Yada yada. So I'm going to be So I've had some people comment on stuff on videos. This is going to answer the question, but it's a little bit of a roundabout. But I live in Tokyo, Japan. So it is currently 1:32. And when I post videos, sometimes the date that I'm posting, it'll say something different. I saw someone leave a comment on a previous video being like, wait, man, how are you posting from the future? Because I am in the future. But in Japan, well, rather, I should say I'm an American, and I moved to Tokyo in 2009. To work at an international school. It's a fantastic experience. I love it. And I've stayed ever since and got into trading in 2015. Now, when I got into trading, about that time, we'd been living in Japan for about 6 years. And my wife loves the Moomin Troll stories by Tove Jansson. I think that's what it is. Yeah. Now, people in the States, most people don't know it, but Guy's shaking his head like he knows. Because people in Europe, they know the Moomins. But people in the US, not so much. We have our own franchises and stuff like that. So when I made my YouTube channel back in February 2018, I didn't think I would make a career out of it. I just was like, okay, I'm going to do this and just try it out. So I had to pick some sort of moniker, some sort of fake name to hide my identity, because at that time, that's what everyone was doing. But obviously now everyone knows my name. But because my wife loves Moonin Papa, I chose Moonin Papa. But as the channel began to grow, got into a little bit of a state of like, oh, wow, this is actually taking off. I don't think I can actually use this name. But thankfully in crypto, the term mooning is not the traditional term that we all know back from our high school days. But mooning, as in like a chart going up and to the right to the moon, is really popular. So it's like Moonin Papa. That's a really nice little transition. So that's why I am known as Moonin Papa.
That's destiny, man. That's serendipity, destiny.
It was meant to be. It was meant to be. And it's funny, isn't it? That moment where, like, because I think it was similar for like Nick and I when we started Coin Bureau. You know, it's sort of like we're making content about crypto. You know, you gradually gain traction, but then there suddenly becomes a moment where it's like, whoa, like this is real. Like, you know, people are, and it's amazing and also kind of scary at the same time. But it's a great sort of moment to be in. And Moonin Papa is a great name. We love it.
Yeah, it's fun. I mean, it works out real well. So it's funny. I mean, of course, you get the people that aren't in crypto and they're like, wait, what's your name? The best was, so I launched my channel in February 2018. And it honestly, I knew the day was going to come that one of my students or students at the school would find it eventually. Not that my daughter, obviously knows that I have a YouTube channel and stuff, but she didn't go around bragging to people that her dad is a crypto YouTuber, because that's not really bragging material. She's like, why couldn't you have been like a gamer or something?
It's not bragging material, mate. I mean, come on, man.
I know. But of course, now she understands because I'm helping to put her through college because of crypto, because of all the gains I made through trading. So now it's like, aren't you glad that I'm not just playing Fortnite all day? She's like, yes. Anyway, but I had a feeling that the day would come where students at the school would find out. And of course, a student stops me in the hall and says, "Hey, Moonin Papa." And I go, oh no. But honestly, it's been fine. Like, there are students that have subscribed to my channel. I don't know if they're actually going to trade, but I've had a couple. It's actually really funny. I've had a couple that I believe are getting into investing and trading and have stopped me and say something like, "You were right. I watched your video and what you said happened to Bitcoin." I was like, I know. I do this for a living. So that's fun.
I've literally spent a very long time looking into this. Like, I should be right.
I should hope so. I should hope I get it right sometimes. Good grief.
Speaking of Moonin, guys, moon up those likes. And let's get this stream rolling. Aaron, I'm going to add your screen to the stage there. Okay. And we're ready to get Moonin, bro. Let's see what you got for us, man.
Yeah. So I feel like it would not be fair of me to talk about Bitcoin and not talk about the video that I posted a couple of days ago in regards to the head and shoulders. So this has got a lot of people upset in the comments, but also a lot of people freaked out. So I feel like it's important to revisit this, especially considering the fact that when I made the video, Bitcoin fell even more, which I'm sure got some people a little bit nervous. So I also going to say that some people were also really unhappy with my left shoulder. My left shoulder is actually just fine. Thank you so much for your concern. But this left shoulder, I would still call it a left shoulder. And the reason why I call this a left shoulder is because hiding this, it's super duper clear. Here's this high. Here's this high. I mean, it's close enough. And I know some people want to say, well, this is the left shoulder and this invalidates it. Well, if that's the case, if this invalidates it, then why didn't it keep going up? Now, I know there's the whole FUD about the United States selling off that 69,000 some odd Bitcoin. And there's also people saying, no, it's not going to happen. It doesn't matter. It's enough FUD to scare the market. And it was enough FUD to create a right shoulder. So the point of the video being that we have this neckline of support at $91,000. Okay. And this quote unquote scary part about a head and shoulders is that the way that we figure out how this bearish reversal pattern could play out is we do a measurement of the head to the neckline, to the support line. And we just superimpose that to the current price. So if the price of Bitcoin breaks below $91,000, we do have a target of roughly $77,000. It's not a very happy scenario. Please understand me. I don't want this just as much as all of you. Now, I was also equally surprised that lots of people leaving comments were actually getting excited about this possibility, saying like, well, this will be like a late Christmas gift to buy Bitcoin down at 77K. I get you, but I also know that there are a lot of traders that are holding altcoins. And if Bitcoin falls, it's looking okay. We're going to talk about price action. But if it falls 17%, alts are going to absolutely crash. So please understand me where I say I don't want this to happen at all. And it will only happen if we see Bitcoin break below 91,000. Yesterday's candle was a scary day because it went down to 91,215. But did it close below? No, it didn't. So apparently the whales are watching my video. Please keep watching so that way you can keep buying. So right now we're still in the clear. There's no need to freak out. The main thing that will invalidate this head and shoulders pattern is for the price to come back up here. There would be a very strange thing for this to be a valid head and shoulders. If the price comes up to make another right shoulder, that would be a sign of invalidation. And obviously, when the price goes above $103,000, that will invalidate the head and shoulders, which again, I'm okay with that. I don't want this outcome. The one other benefit is that there is an existing CME gap. And for all of you that don't know, the CME stands for the Chicago Mercantile Exchange. It's a US-based derivatives or futures exchange that handles a lot of money, and they launched the Bitcoin perpetual, well, not perpetual, but they launched the Bitcoin futures trading chart basically at the top back in 2017 in December. So during this time, what will inevitably happen with price action with the CME is that there will be gaps, just like we see in the stock market, because the CME closes for the weekends and also for US national holidays. So there is an existing gap down here. And if the head and shoulders actually plays out, it will give some people a discount to buy Bitcoin, but it will close the open CME gap, which would be a positive thing, net positive. Now, let's say that the head and shoulders is invalidated. Hooray, great. We still have this gap down here. So if it's not filled in the short term, I still would expect it to be filled in the next 2 years when we're starting our bear market year, essentially. So this is still a target, but I would much rather close this way after, so that way we can enjoy the upward movement of Bitcoin. So for all of you that like, okay, head and shoulders, I don't buy it, man. I'm not buying that at all. Okay, so what about this? So again, I'm not trying to be a bear. I am like the least bearish person you will ever meet on YouTube. It's insane. But I also am going to be objective when I look at charts. It's foolish to stay one side or one-sided in trading, because trading is about the price going up and down. And thank God there's no Z-axis. Although, let's be honest, sometimes it feels like the charts are coming out and like strangling us. But we also need to be flexible. There's a really good saying that I heard, or I saw someone post on X, and I don't know if it's an official quote from someone, but essentially the idea is strong convictions held loosely. That's the perfect place to be as a trader. We can have the best setups, the best possible drawings. But as we were talking about before the stream, Nick was saying that a whale could come in just as easily and just buy up all the Bitcoin. There could be some sort of news event, especially for some of these low volume charts over here. Well, not low volume, but especially when we get down the list, yes, they could totally blow every TA or technical analyst's drawings out of the water. So we need to be flexible. We can't be super rigid when it comes to trading, especially in a really small market like crypto compared to the big boys, okay? So with all of that said, there's still a descending wedge. Now, the problem with this and the textbook example of how this works, price comes up, it hits a high, it comes down to make support. But it doesn't make a new high, it makes a lower high, and it goes back to support. Lower high, back to support, until finally, it's basically like a bouncing ball, except the bouncing ball doesn't just stay flat, it breaks support. So this is actually a bearish setup. I don't want this outcome. Again, please don't hear me saying, okay, I'm going to short the market right now. No. It's a DCA market. I'm not shorting this market, because we also know that in in 10 days, Donald J. Trump is going to be sworn in as president of the United States. I'm expecting a Trump pump, like a lot of people are. So the problem is that if we hold 91K, the price goes up, but we don't make a new high, then we start to make this pattern, and it starts to make me a little bit worried. So ultimately, for Bitcoin to be bullish, we really need to meet or exceed this level right here at about $102,000. So that's the main story on BTC right now. That's the easy way to say it. So if it's not the head and shoulders that's bearish, now we have a descending wedge, not bullish. This is a bearish setup. So Bitcoin really needs to push above $103,000 and stay there to invalidate a lot of these bearish setups. What do you guys think about that? Or do you have any comments or questions on it?
Yeah, no, I think it's really interesting. I mean, I guess the question is, you're obviously mostly looking at the formation of the head and shoulders and then this descending wedge. Are you looking at any other time frames or any other sort of indicators, oscillators? What other indicators and you know, other charts are you utilizing to be able to either inform or invalidate opinions?
So I'll give you guys the good news, okay? So I love the 4 hour. The 4 hour is one of my favorites, mainly because this is my early warning alert time frame. I get a lot of information from the TBO indicator that I use, all this crazy stuff that looks super duper busy. I'm going to hide for a second. But even RSI will give us some early warning alerts as well as on balance volume. as well as just volume in general. So the main things that I'm seeing right now that I got excited about this morning and look very promising is even without these other indicators, there's clearly a bounce zone right here for Bitcoin on the 4-hour time frame. Established back here in late November. There's that December 5th or 6th, as it says, wick. We have a bounce there, bounce there, bounce there. It looks like this is the next bounce that's happening. That's great, but we can't go off of price action alone. So thankfully, RSI agrees with us. So I actually am one of those crazy people that loves to chart and draw trend lines on RSI. And on the 4-hour time frame, we have our low, and then we have our higher low, which is great. So we can draw a trend line from there. And lo and behold, RSI came down and bounced off of it, and it's actually moving up. Now, the one thing we have to remember about the 4-hour time frame, as much as I love it, and as promising this looks, and I do actually expect Bitcoin to move up probably to $98,000, maybe over the next 2 days. But the faster the time frame, the weaker the results. The faster the time frame, the weaker the signals. So as the old adage goes, longer is stronger. So when I'm making a lot of my decisions, I love using the 4-hour time frame, but the reality is that it's also very finicky, and it's not going to give us perfect signals every single time. It's going to be very early, but it's nice to see some strength building on the 4-hour that's actually resulting in a green candle so far for today. Looking at RSI, which I love. You're going to hear me talking about RSI a lot in my videos. I love RSI just because it's so dang easy to use, and it's simple. It's not convoluted at all. For those wondering, I use RSI with the length of 7, and I don't use the Bollinger Bands. I don't use a moving average. I don't do any of that stuff. This is just as simple and easy as it gets, okay? So the nice thing about RSI is that it's not necessarily oversold, which I consider oversold values on RSI at or below 25. It's dipped down to a bounce, quote unquote, range. We could almost draw a trend line there, maybe, possibly, something like this. So that's kind of good. So it's holding support, kind of, sort of. But honestly, I kind of want the Band-Aid scenario where we just dip and rip, fall down, get super oversold, and then we have a cleanse in the timeline. But we're just going to continue chopping. On balance volume is another great indicator to use. This is just going to be showing you cumulative volume day after day. So how it works is actually pretty brilliant. It's pretty clever. So when we get a red candle, on balance volume drops based off of the volume. Drops, and it grows. So what's interesting about this is that when we put on a moving average, I'm using a 21 SMA or 21 smooth. 21 meaning this is the look back length. It's averaging out and smoothing out that average over the last 21 periods, or in this case, 21 days. We're basically flatlining. So it's helpful because on balance volume is yet again another trend-based indicator. And I'm really big on trend trading. I think trend trading is one of the best ways to make a whole lot of money. And it's also one of the least stressful methods compared to scalping, compared to intraday trading, things like that, or just trying to find a good entry. Like, it's much easier to jump into a trend and hold and stay in that trend. And on balance volume is really helpful in telling us when we have a really strong trend in play, or when we're going through a period of chop. So when on balance volume on the daily time frame crosses above and forces this moving average to curl upward, that'll be a great sign. Albeit the price will be a lot higher, but this is supposed to give us confirmation that the trend is strong. So if we don't want to wait that long, what do we do? Well, this indicator right here, not the triangles, but this one, this is my TBO. I love this thing. So the whole purpose of the TBO is to show the strength of the trend and breakouts. It stands for the trending breakout indicator. So right here, these white dots, these are breakout signals on the daily time frame, and they happened here, October 28th, 29th, and then right here on November 6th, and that's the Trump pump right there. And it did an amazing job plotting when it might happen, and then it shot up. It resulted in a 42% increase, We actually have one of these similar things on another chart that I'm going to share in a minute. But when I talk about breakouts, that's what I mean. When I talk about the strength of the trend, I'm talking about this bad boy right here. So the TBO, if you haven't cracked the code already, it's basically just 4 different moving averages with different lengths. They're different styles of moving averages. But this lower line right here, this is the slow line. This one gives me every bit of confidence I need to buy the dip. If I don't have something that's trend-based, and you can use the Ichimoku Cloud, you could use moving averages, the MA cross, stuff like that. Moving averages are great, and they're really helpful, especially longer ones, because the longer, the stronger. Long is strong. That's a good thing, because we want to have a strong confirmation that even though we're in a period of chop right here, at least the slow line right here, the slowest moving average, is still pointing up. So this is giving me that confidence to buy the dip on the dips. This is giving me confidence to know that, well, while things aren't that great, even if we dip down, this is still moving up pretty strong. So it's giving me confidence again to go, all right, things are not great for Bitcoin, but they're not as bad as we all are feeling, especially when we look at the timeline.
I mean, that for one thing is reassuring to hear, isn't it? Because there's so much, there's sentiment is really bad at the moment.
And it's hilarious because we're at $93,000 and the sentiment makes it feel like we're at $23,000, to be honest.
I know.
Yeah.
It's crazy. It's crazy. Well, I mean, obviously this is Bitcoin we're looking at.
Yes,
I imagine things are going to look a little hairier when we get into some altcoins, right?
Yeah. I posted a video on the Coin Bureau Trading channel that I strongly suggest you all to watch. It's called the multiple factor effect. It's something I've talked about on my own channel. It's something I talked about on X a lot. It's just a stupid, simple concept, but so many people overlook it. And the whole idea is that Bitcoin is going to be volatile, even though it can be really boring. Sometimes it's just grandpa Bitcoin. When it has these days where it's down 5%, lo and behold, we're going to see coins like SUI, we're going to see it fall down a lot. We're going to see a lot of negative price action for these coins like Celestia, where Bitcoin falls and tumbles a little bit. It's like that meme, seeing the 2 drunk guys on the hill. Yeah. One guy is Bitcoin, he falls like a little bit, stumbles. And then the altcoins are going down 10, 20, 30, 40, 50%, right? So the whole idea of the multiple factor effect is really simple. Bitcoin is going to fall. And when it falls, you're going to see altcoins fall anywhere between 1.2 times to 2.5 times whatever Bitcoin does. So we've seen Bitcoin fall a total of, 10%? And we all know that some altcoins have fallen 20%, 25, 30% over the last 3 days. It's been pretty bad. But the flip side of that is when Bitcoin gets bullish, we're going to see a lot of coins green, and a lot of coins are going to be outperforming Bitcoin today, especially when Bitcoin calms down. If it recovers and it hovers like that, usually we're going to see alts send. Okay. The main answer I have for you as far as like altcoins is this chart. So I talked about this as well on the Coin Bureau Trading channel about this is the signal that I'm waiting for. And this is it. It looks like a weird robot, kind of, but this red line right here is everything, because this red line is showing us, let me clean up the chart so it's a little bit easier to see. It's showing us long-term overhead resistance. So it was established back here in January 2022. And then we draw that to our top right here in March 2024. And the good news about this is that we had a lot of this quote unquote price action. It's a percentage, so it's not really price, but many of these lines wicking above this red line, these are all pierces. And there's a difference between a pierce and a test. So again, I'm kind of accumulating a lot of knowledge that I've shared in previous videos to kind of pack it into this one concept, but a pierce means that the price breaks through, okay? It's a good thing. It doesn't necessarily mean it closes above. So that's actually a strong thing. Whereas a test means that it respects the level. So for instance, like this candle right here, this respected this overhead resistance level. But we got 1, 2, 3, 4 pierces right there, albeit they're not great. And what's amazing is that this old line of overhead resistance, we don't see this dominance chart closing above it. But the fact that it pierced so many times is a bullish sign to me. Even if it's going to take a little bit of time for others' dominance to pick itself back up, but this is the range right here. And when we see others shoot back up and push above here, this is where I expect others, low caps, alts to just go crazy. But until that happens, we're going to see continued chop, unfortunately, for a lot of these coins. And the problem with that is that a lot of you are getting antsy. A lot of you are getting overexcited about using your Bitcoin or trading BTC markets. And the problem with that, while XRP has looked really, really good over the last, 3 months, the reality is that this coin, if we zoom out to the weekly time frame, this coin does not keep up with Bitcoin at all. I mean, it has its moments where it pumps like amazingly, but it takes a long time. And most of the time we see it drop massively. If we look at SUI BTC, yes, the coin has had a really nice uptrend recently. But when Bitcoin's bullish, if it can't keep up, we're going to see some massive drawdown of like 74%. So the reason why this chart for others' dominance is so important to watch is because when we break above that level, that's pretty much the starting pistol for alts to go absolutely crazy. So we can actually use our Bitcoin to buy XRP, to buy SUI, to buy Celestia, to buy whatever, to increase our Bitcoin stack, which in my opinion, that should be the long-term goal of every trader, but not everyone agrees with me on that. But yeah.
Just a question, Aaron. In terms of your using the total crypto market cap, excluding top 10, I mean, obviously, is that because you're focusing on the mid caps there? Not the top 10.
So I interpret this information differently than the traditional definition. So like if we were to look at total market cap, I mean, this is the total crypto market cap, easy, right? Total 2 is everything minus Bitcoin. Total 3 is everything minus Bitcoin and Ethereum. Others is everything minus the top 10. But the reality is that when I look at this chart and when I see the performance of it, to me, others is like everything from the top 100 and down. These are all like the low caps. Total 3 would be like top maybe 10 to 30. Total 2, in my opinion, is more like the behavior of the top 10 tokens. So yeah, I know it's a little bit confusing because it's not the traditional usage of it, but even though it says right here, excluding the top 10, but given the behavior of this behaves way more like low cap alts. This behaves way more like meme coins and stuff like that, in my opinion.
And just regarding in terms of like the way you place in the actual trades and how quickly alts react, okay? Because obviously, it is alts move much faster and much more volatile than Bitcoin, right?
Yeah.
But how quickly do they react, and how for instance, if Bitcoin is rallying on a particular day, like how quickly are altcoins reacting in terms of the increased volatility on that, and can people actually make a trade on that based on, isn't it adjusting very quickly? Aren't the market makers moving much quicker than people can actually trade it in? And
yeah,
then I suppose it comes to a broader question in terms of how, what time frames do you use for your trades, and how is it day trading? Is it more like a longer term? So I mean, I guess these are all packed together.
Yeah. So it depends on the strategy. If I am looking at, so let me just say it this way. I still believe that this year is a top year for Bitcoin. And I believe that Bitcoin's going to top out in November of this year, which means that we still have a lot of year left for crypto to do really well. For that reason, a lot of the trading I'm doing right now is more swing trading. I'm looking at good potential projects, whether they're new listings or they're projects that have a lot of promise or I'm hearing a lot of buzz about, or it's like a super crazy cult-ish meme coin following, meme coin. I'm looking at coins to hold for the next, 8 to, what are we, like 10 to 11 months, honestly. But with that said, I also am using an automated strategy. So I'm using bots, DCA bots, to accumulate coins that I like or just to accumulate profit. And the difference between the two is that the bots are going to be closing multiple trades a day, depending on how that chart's performing. And it's going to be making these small little profits over and over, because it's basically a scalping strategy, but it's an automated scalping strategy. Whereas a lot of these long-term holds, I'm just kind of sitting on my hands and enjoying the volatility along with all of you, but with the expectation that I'm going to get my 5x, 10x, 15, 20x out of these positions. So the benefit of doing both is that while I'm sitting on some of this volatile price action right now, I know I have bots that are still generating profits, albeit small ones, but gradually over time, it snowballs like crazy, just like this channel has. Every subscriber, you're not little, sorry, I shouldn't have said that.
DCAing into our subscribers. We DCAing into our subscribers.
That's right. But seriously, channels grow. Like you guys are up to over 2 million, right? Subscribers on the main Coin Bureau channel. You got there because of every single one of you people watching this channel. And if you haven't subscribed to their main channel, do it, because it's ridiculously high quality content. But it all starts with that momentum and those, one subscriber, another subscriber, just over and over and over. It helps and it balloons channels, but it also balloons your portfolio. But this is happening passively with a DCA bot. So it depends on the strategy. I like using both because I think it makes the best use of my portfolio. So I have part of it just kind of sitting there, waiting, swing trading, and part of it being put to work 24/7, 365.
Yeah. Great. Can I just for anyone who's sort of maybe a real beginner to trading, like how easy is it? What platform do you use for your bots? And I mean, how easy is it to set up one of those? Because I'm sure a lot of people are hearing this and thinking, well, that sounds pretty high level stuff.
Well, I'm not going to lie to you. There is a learning curve. It's not as easy as going onto your exchange and just clicking buy. So the platform that I use is AllTrading. There's a link for it in the description of this video. The reason why I love AllTrading is because I've been doing this. I've been bot trading using multiple platforms since 2018. And actually AllTrading started in 2018 as well. And they just grew and grew and grew. And they have been resilient through bull and bear markets. 2022 had no hacking incidents. They have a reliable and fantastic customer support team. They are super, how should I say this? I guess they're super anal when it comes to security. Like they have like a 5-word trading password. They have a unique API key and secret for every single bot you set up. So the reason why I like AllTrade is because it protects my portfolio, which is what I want. And I need to protect my portfolio, all the gains I'm making. But their active and their passive trading tools are ridiculously powerful and granular. So you can use it as a newbie trader. Some of it will look really familiar, but one of the best parts about it is that I can connect multiple exchanges, and I do, to AllTrading. So that way I can manage and monitor my entire crypto portfolio on one trading platform. So like that's the main reason why. So as far as bot trading goes, there are lots of easy templates that you can copy. We have, I have TBT signals, which stands for the better traders. But the TBT signals are introductory, like, green as green can be, bot trading signals for basically 25 or 30 coins, slow, safe, conservative. There are templates that you can just copy. You just decide how much money you want to put into the bot and you turn it on and it runs. There's strategy that goes into it, just like there's strategy that goes into you choosing which coins you want to trade or where you're going to decide your entry. It's not necessarily set it and forget it 100%. But that's life. Like you're going to have to get your hands dirty sometimes, especially when there are pullbacks in the market. But there are also a lot of amazing tutorials and resources that you can use to just get up and running with automated trading.
Yeah, I think we met the AllTrading team out in Amsterdam. Yeah, so credit to them for not having had any sort of hacks compared to a few other bot providers, which shall remain nameless.
Yes,
API hacks. Coming back to your point around DCA into these cultish meme coins. Now, this is obviously a good segue into a very cultish meme coin. Which one? One that you actually did a video on a few days ago.
Yeah.
I saw the ticker over there.
Yeah.
SPX 6900, right?
Yep.
There we go, man.
This coin's crazy. If you guys haven't, you guys watching the stream, you haven't looked at their X page and all the memes and the videos they put out, it's next level. It's not just like a frog or a dog. Like they're going like hardcore. So anyway, like it's crazy. The market cap, I was shocked, to be honest, to find out as much as Must Stop Murad was talking about this on X over and over. I was shocked to find out how small the market cap is compared to some of the big meme coins that a lot of you already know. So that also is like, wait, hold on. There, it could, even though this chart has honestly pumped, like, you would talk about like a god candle, like that's insane. It's pumped 12,000% over the course of 30 or 40 days. So a lot of people looking at stuff like this are thinking, just like I did, because unfortunately I didn't buy down here or here. I thought, okay, I'm going to buy in the pullback. Nope, I'm going to buy in the pullback. Nope, doesn't happen. So eventually I just kind of gave in. And now I'm holding and I'm net positive. Like it's crazy. But I want to make a point about meme coins and DCA, like Nick was providing that wonderful segue. A lot of us are looking at charts like this going, there's no way I want to buy into a coin that's now $1.15 when it used to be down here, like a fraction of a penny. There's no way I want to buy into something like that. Whereas if we were to actually pay attention to the trend, and that's why I love this indicator, the TBO, this is a very strong bullish chart. We even have breakouts that happened and that we got all 3 in a row after I made that video last week. The chart is strong bullish. A lot of us approach charts like this that are looking super overbought, thinking there's no way it's going to go higher. And lo and behold, we'll see the charts pump and pump and pump. Now, I don't have inside information on this. I'm not being rewarded by the team with any tokens. This is just me looking at charts, specifically crypto meme coin charts, knowing that we've seen so many of these go up and up and up. And it seems like, wow, it's already pumped so much. Could it really pump that much more? Yes, especially this year. But let's say that I'm looking to trade and to invest in SPX, and I have some money, and I want to put some money into this trade. Now, if I had not bought into this chart, how I would go about it would be identifying some support and resistance levels and then slowly inching into my position. So for instance, and I'm not even going to use the TBO. We're just going to use the naked chart. So turn off the lights, ladies and gentlemen. We have resistance right there, or support / resistance right there where the price is kind of struggling. We have down there, we got support. We have this little range right in here, okay? We could use Fibonacci levels to find support and resistance. We could do all that fun stuff, but let's just say I'm impatient. I don't want to draw lines. I just want to buy, okay? Which, to be honest, in crypto, in a bull market, there's nothing wrong with that, as reckless as that sounds. Traditional TA would say, well, let's at least find some levels of support and resistance that the chart is respecting so we could place some orders just above. So it's interesting, right? We see this break of this level, and then we have this line right here showing that this is a pivot point. This is as well a pivot point. And the price fell yesterday about 17%, and today it's bouncing back up, but just above. So the point being that we can draw as many of these lines as we want, but we never place orders right exactly at these levels. Usually you want to go just above. So that way you're guaranteeing yourself an entry. You don't want to go below, in my opinion. I'll say it this way. I don't go below. I always stick above. Okay. So let's say, forget all these lines. I don't need these lines. Lines are for losers. I just want to buy SPX because it's amazing. Great. So if you're going to buy it, are you going to go all in? And if you do, are you going to use a stop loss? Well, this is where things get tricky, because if you're trading it, you'll want to use a stop loss. If you're going to be holding a long-term swing trading position, I would actually recommend to consider not using a stop loss, but using DCA instead. And the reason for that is actually pretty simple. If I were to go all in with $1,000 right here at what, 117, Now I'm putting a lot of risk on my portfolio because there's a chance that SPX could also fall 30%. I don't want to lose $300 in my position. I would much rather say, well, I want to buy some SPX. I want to have some exposure to this meme coin. And instead of going all in, I want to make sure that I only use, we'll just say 1/3 of my total possible value. So if I'm going to be using, we'll make it $900 because it's easier in my mind. But if it's $900, then I'm going to put 300 in right here. And I'm also going to have an order ready and waiting down below. Oh, come on. No, come back to me. Here we go. So I'm going to put my other 2/3 at some predetermined level. So maybe like back down here. Or if I'm feeling really scared, I'm going to put it down here. But the beauty of inching into a position like this, not going full in, but using just a fraction of what you're planning to put in, it actually provides you with a lot of buffer. Let's say, for the sake of an example, you are really excited about SPX and you bought literally at the tip top. With DCA, if you happen to buy on the dip right about there, while it looks bad, it looks like your entry is way up here and you are down, try to do the math, down almost 30%. When you're DCAing, when you're buying twice as much on the pullback like this, your actual entry is going to be more around the lines of like right about there. So in reality, because of DCA, and I'll make this a little bit different, you're only down about 5 or 6%. Now I'm just guesstimating here. I don't know the exact value it will be, but I can tell you from years and years of experience using DCA bots since 2019, this is the best way to enter into a position. So using a bot is way better, in my opinion, because the bots don't care about who's in office. The bots don't care about what's happening around the world. The bots don't care if there's a fire in California or if there are UFOs flying over the coastline. The bots don't care if China is selling or if they're banning Bitcoin. It doesn't matter. The bots are going to buy no matter what. So if you can adapt a a crazy, super disciplined strategy, and no matter what happens, even if the market is dumping and crashing, you're just going to buy no matter what, good on you. But most people will rely on a bot. And that's, again, another reason why I like bot trading so much. But applying that strategy with active trading, as I call it, or swing trading, making that conscious decision, I'm going to buy here, I'm going to buy more here, it really helps to protect your portfolio. Another reason why it's really great is, let's say that we do put in 300 here. We're just going to use a number because it's way easier just for me to visualize. So that means I have $900, but 600 of those dollars are not deployed yet. Even though my $300 is going to be down 30%, so I'm going to be down $100, I have $600 waiting to buy, right? So the benefit of this too is that by using a DCA strategy and not going all in on every single position, I'm putting some funds to the side in the event that there will be a pullback, because it's crypto and we can pretty much guarantee that there will be pullbacks, there will be volatility in meme coins. So this way we actually de-risk our portfolio massively by having that $600 on the side. Even if we're down $100 on our position and we buy on the dip on that predetermined price, boom, now we've executed that $600. Total position now is worth $700 because of the drawdown. But when it comes back up, we put in all of our big 2/3 size there. So when the price retraces and goes back up, we're not waiting now underwater 30%. We're actually in profit. Mm-hmm. So when the price goes up and it returns back to where we previously bought, we're actually way in profit. So that's like a quick breakdown of why DCA is one of my favorite strategies when it comes to trading. Now, I'm going to jump ahead to what all of you are thinking. Does DCA work all the time? Nope. There are times where you cut the rope. Terra Luna, cut the rope, right?
DCA to zero.
Cut the rope. Now, I've taken losses. I've taken some really painful DCA losses because crypto is volatile and the charts will fall. But 95% of the time, DCA is going to reward me for my patience, which is what it's about. There's a great quote from Warren Buffett that's I'm going to do the Aaron Dishner version, but the stock market is an exercise in rotating funds, but from the impatient to the patient, something like that. But it's a fantastically accurate quote, and especially valid in crypto. So many of us are impatient to get that 100x, that 200x, because we see screenshots where it's unrealistic. And a lot of us are dissatisfied with 5% profit or 10% profit, and we're not going to sell. So again, I'm culminating a lot of the stuff I've already made on the channel to say that there's nothing wrong with taking a little bit of profit out. You don't have to wait to some magic number, some price level, or some percentage level. If you're just feeling like, I don't like how this feels, just take a little bit out. Like, you can buy back in on the balance. It's okay. So I'm kind of going crazy a little bit, but you guys got me talking about DCA. This is what happens.
I know, man. I just have a quick question. Then obviously now this is brought. Now obviously you use these numbers and this third as an illustrative, right? A simplistic example. But
yes,
let's assume someone's watching this right now and they're like, okay, I want to utilize Aaron's DCA strategy to a degree to, DCA into SPX or any other meme coin that they're very bullish on. In terms of capital allocation, and in terms of fund allocation, like how would you break it down? Like how much percentage wise in each particular buy, would you recommend? Because obviously 3 is still quite a large chunk for a long extended bull rally potentially, or a coin that is very volatile, will have many entry points. Yeah.
You're actually getting ahead of me because I'm going to be releasing a video next week that's going to talk about all that stuff. But but to give you the summary of it, the Cliff Notes version, the idea behind the way that I approach trading and investing is I treat my money like a business. And if you don't, you're treating it like it's tokens and you're at, Las Vegas, like you're gambling. If you want to be around for the next bull run, you'll start looking at your funds more seriously. You'll start looking at your capital, no matter how much or how little you have. If you don't protect your portfolio, you're not a trader anymore. You're working at McDonald's. Okay. So how much do you put in? That has to be something that only you can decide. But it should always be, as everyone says, an amount you're willing to lose. I started with $700 and I was doing all types of side jobs to earn some cash. And I bought Ethereum. I went all in on Ethereum. 2017. Okay, this is a long time ago. So don't judge because what I just said. But it went up from $700 to $1,200. And I was so excited. And I showed my wife, look at my phone. Like, I just made all this money. She's like, that's great. Don't lose it. It's like, why would you say that? Don't say that. But I didn't sell when it pumped. And then it went back down and I sold at a loss. And as I started to learn about crypto and how volatile it was, I had to program my mind. Okay, it's stupid and foolish for me. Maybe it's not for all of you, but for me to go all in on anything. Never going to do that again. So it makes way more sense to look at my business as, what am I going to use my business for? All of you that do run businesses, you can't do everything yourself. So you have different offices, different positions, different people doing different things. Treat your portfolio the same way. In the example that I shared before about alt trading, my DCA bots are an extension of my company. Make sense? So I'm using my capital passively for that purpose. And I have some of my capital applied to swing trading as well. So how much? I mean, that amount is up to people, but I think it's better to think in percentages. So I'll say it this way. I do believe that it makes sense in your crypto portfolio to have, and this is not going to be a really great drawing, but you should have about 20% BTC. It's not going to draw very well. It's okay. And then 20% stables, whatever that is. Now that leaves 60% for you to play with, okay? The reason why I say it like this is because Bitcoin is your buoy. So are stable coins. When the market's dumping, you're going to be happy that you have the stable coins on hand, so that way you can weather the storm, proverbially. When Bitcoin is pumping, you're going to be really happy you have some Bitcoin because alts are going to be dumping. They won't be able to keep up. Now with that 60%, it's up to you what you want to do. But honestly, I feel like it makes way more sense to have no more open positions than you have fingers. So a max of 10 open positions makes a lot of sense. And when you start being more aggressive with that, if you wanted to split it up into 5 positions, that makes a lot of sense too. The idea is really simple. Whatever the numbers are in this, now it looks kind of like an ugly pizza, or it looks like, we'll just delete all these lines. But we got 60% there, right? The idea is simple. The less positions you have open, the more manageable your trading becomes. I say a lot of stuff over and over, but it's true that less is more. If you're really trying to make a whole lot of money, why do you have 100 meme coins? You might as well just go to Vegas and play roulette and put $1 on every single square. It makes no sense. While you might catch a 10,000x, if you've only invested 1 or 0.1% of your entire capital in it, good job. Like, you made money, yay, but that's not really very smart and intelligent as far as like deploying your capital effectively. Whereas if you restrict yourself to having no more than 5 open positions or no more than 10, it forces you to be way more picky about the positions you choose. If you're trying to decide between, I really like Celestia, but SUI is so similar and I really like this one too, and SUI's on an uptrend, which one do I want to do? This is my last one. You're going to spend a lot of time thinking about which is going to be the best coin for you. Whereas if you're just going, I want some of this, some of this, some of this, you're literally going to be buying like these little itty bitty amounts that won't amount to anything at the end of the market. Whereas if you can have just a little bit more determination, if you can have a little bit more self-control and restrict yourself to having less positions, you might not make as much on one of those small micro like meme coin positions that goes up 10,000, 20,000%. But overall, your portfolio will do extremely better. And when the market dumps, when we have a serious pullback on BTC, a sudden one due to FUD or due to some resistance level, everything dumps. Managing 5 positions is so much easier than managing 50 positions or 100 positions. A lot of people tend to give up, honestly, when the market starts to get rough, because they have way too many positions open. They have their money spread across so many different wallets, so many different meme coins, so many, like, everything. It's a mess. Whereas if you can learn to be disciplined, look at your portfolio seriously like a business, go, okay, I'm going to have 5 positions. I'm going to trim the fat. I'm going to consolidate. I really like this. I see promise in this. I like this. Boom, done. You also have so much more peace of mind, because we all know crypto, you can age dramatically. I mean, 1 year in crypto is basically 7 years. It's like dog years, right? So those are my thoughts in regards to portfolio allocation, I guess you could say.
Yeah, I totally agree with you there, man. I think it's not just from the perspective of trading. I think also from the perspective of just if you do fundamental investing in crypto, it's like the whole concept between a diversified basket of assets or a very small basket of assets. It's like, rather than having many different eggs in different baskets, have all your eggs in one basket and very intently watch that basket. So this is a very good point, I think. Not just about trading, but portfolio allocation in general. And you also atomize your attention too much across too many different narratives, too many different coins. And you just, you're not doing enough analysis on a particular coin or token. You're just like, I'll just ape into that. And,
Exactly. Yeah. I mean, you can even use this analogy with friends. I mean, how many of us have so many friends on Instagram or followers or whatever? It's like, how does people really care about you, really know you? Not that many. Most people in reality only have a couple of really close friends. I wonder why that is. Because it's ridiculous for us to expect to keep up with like 50 people all the time, right? It's unrealistic. So there's so many ways that you can look at this, but if it works well with friends, if it works well with family, if it works well with managing money in real life, if it works well with managing properties, then it should work really well in crypto as well, like when you're thinking about managing your portfolio.
Yeah. And I think it's instructive to hear someone like you say that, Aaron, because obviously I'm sure a lot of people will be watching this or watching other videos that you and the other guys do, here on Coin Bureau Trading and thinking, well, these guys are professional traders. They're looking at charts all day long. They have so much time to think about this. I don't. I'm working another job. Maybe I'm working another 2 jobs. Maybe I got a family, all this sort of stuff. And I think it's really important to hear like someone in your position who has all this time still saying like, don't go crazy, because like even those of us who do this for a living, we can only watch so much. I think that's a really important lesson for people to take away. Even the pros are keeping it simple.
Yeah, keep it simple, stupid. That's it really does help.
Yeah. Okay, and were there some other coins that you were going to take a look at?
Yes, I did.
SPX 6900.
Yeah, I feel like a lot of people are still wondering about this. XRP had an incredible November, no doubt, because of Gary Gensler, because Trump, all that fun stuff, and shooting up like crazy, 400%. Now it's chopping. Now it's looking rough. And a lot of people that bought up here, similar story. If you're going all in on XRP at like 270, and now you're down 13%, 15%, 16%, you're probably wondering, I don't know, do things really look that strong? And the reality is, yes, things actually are still really strong. Again, this slow line moving up for XRP is a good sign. The price is extremely high. It's very overbought. But even going to the weekly time frame, it's still strong. Now, a lot needs to happen, and I tend to believe that anything that pumps too high too fast is going to pause for quite a while. We've seen this behavior with XRP. But there's actually this super duper crazy thing. I don't think I've ever shared this. So it's all for you guys. But there is an incredible, epic 4-year bull flag. It's insane. So a bull flag essentially is a descending channel. And it was established back here in 2017. And it was set here in 2021. And XRP has just been in this cursed range for such a long time, and people were finally rewarded for their patience. Hooray. Now, the fact is that we're out of this bull flag, which is fantastic. And it's actually a real bull flag, because real bull flags need to have the price coming up from the bottom, coming up, and then hitting resistance and going all this fun stuff. And then eventually we break above. Usually there's going to be a retest. I know you don't want that to happen, all you XRP holders, but usually there is. And then the price goes up even higher. Now, targets for XRP get a little bit crazy because it's already pumped so much. But the fact of the matter is that even though the price is chopping right now, it's still a bullish chart, in my opinion. I'm going to hide this just to highlight some of these fibs. And if you think I'm crazy for all these fibs, remember, this is the weekly time frame, and there's a lot of good reason for this, okay? All of these crazy colors. It's a Technicolor live stream today. So the first thing is that we need to pay attention to round numbers, because round numbers are significant levels of support or resistance. XRP topped out at $2.90, 10 cents shy of $3. No surprise there. But if we look at all of these overlapping Fibonacci extension levels at $3.09, $3.31, there's actually a lot of resistance up here for XRP. Now, can it push above? It sure can. But when I see multiple Fibonacci levels, all three of them literally are overlapping right now. This is a pretty strong area of resistance. Now, it's also where the all-time high is here at $3.31. If XRP, big fat if, it can break above its all-time high, my next target, honestly, would not be this. It would be up here at about $8, which is a crazy increase, especially for XRP. Going up another 250% is insane for a coin that's in the top 5, especially with such a cursed and awful legal history. But now that those shackles seem to have loosened from them, and they have Trump, who's met with their main man, Brad Garlinghouse, right? I think that things are looking up for XRP, even though the short term it's not looking so fantastic. So I just want to give a little bit of hope to all of you XRP peoples.
Of course, the biggest indicator of all TA indicator we need to look at is the XRP Army Hopium indicator. Because that's rocket fuel itself.
I think that's always at 100. Last I checked, it doesn't matter.
It's breaking through all resistance levels, bro. It's good.
Well, look, we laugh, but they they're the ones laughing at the moment. They've kept the faith. Hats off to them. It's they've been proved right so far. And Aaron, if you're right, like they're going to be laughing for a lot longer yet.
No, good.
Yeah, good luck to them.
I think that's also. I just want to make a PSA, a public service announcement in crypto. Let's start this bull market year off, this top year off right, and actually congratulate holders when they're making good money. Why is there this competitive atmosphere in crypto where we're so bitter, like, oh, that coin's pumping? Like, let's be excited. Like XRP pumping is hilarious, and I love that it's happening. I sold mine way too early, obviously, but I'm happy for everyone else that's holding. Like, let's adopt that, because having that gratitude mentality, having that like yay, like cheering people on, that's really what we should be doing, because this is the level playing field. Crypto is for everybody. This is excluding all of the old farts that have done investing for years and years, and they bought back the S&P back in 1812. Like, this is for us. So like, when people are doing well, let's cheer them on. Let's not be bitter. Sorry.
Yeah, Aaron, it's like you guys, the familiar meme, the respect the pump, fellow YouTuber Ivan on Tech. Remember that
yes.
that video? It's like, you respect the pump in all assets. It's like good karma, Don't go and say this coin is pumping, you just got to respect the pump, because the karma will come back to you. So if XRP is pumping, respect it, enjoy it, be happy for the XRP community.
Yes.
Because your coin that's underwater, it's next. Just get good karma with the pump.
Respect the pump. I love that. I mean, it's awesome. I've seen some people ask about SUI. SUI is fantastic. It made a new all-time high, I believe, this week. And it's having a little bit of a pullback, but honestly, this is a crazy strong chart. So again, I want to use the TBO because it's a trending breakout indicator. This is an insanely strong slow line right here. Compare that to Bitcoin's angle, okay? Compare that to XRP is ridiculous because it's pumped so much, but this is strong. This tells me that there will be pullbacks, and we're seeing that, but this means longevity to me on the daily. On the weekly, the fact that the price is well above this cloud, that everything is curling up, like SUI, even though it will have pullbacks, it's still a strong bullish chart, in my opinion. Now, Celestia, a lot of us find charts like this and we start drooling. Let's be honest. Let's be real, right? We see charts like this that are so oversold and we're like, ooh, it's fallen so much. I can't wait to buy when it gets down back to that zero, like $3.72. Where in fact, like most of us, when we get down to that level, we're going, no, I don't think so. I'll buy when it goes lower. I don't think so. It's going lower. So it's the inverse, because why are we so afraid to buy charts like SUI that are pumping, or SPX or XRP? But when we see a chart like this that's oversold, we're like, oh, I can't wait to buy this chart. It doesn't really make sense. We think we're getting a discount, but the reality is that this is actually it's still a very much strong bearish chart. Is it near the bottom? Honestly, I think it's getting close. When I look at a lot of things, like I have basically, there's divergence here. Let me hide the fib levels and all this stuff. So divergence is essentially defined as when we have two things that are in disagreement. So we have the price that's moving down. Let me hide the TBO2 just so I can make it super duper clean. Price is falling like this, and then we see RSI is growing. It's moving up. So that's hidden bullish divergence. It's actually a good thing. It's not perfect, but like right here, we can see price falling, RSI growing, and then what happens? The output is a pump. Now, the crazy thing is that right now, TIA, the daily RSI, is holding support. I personally think that TIA is going to pop a little bit from here. If we use our fibs, I'm going to go back to our lines. There we go. I think it's, nope, not that one. This one. So there is resistance right now. And this is why I use Fibonacci retracements, by the way, is because everyone else is using them. And you can see evidence of that here and here and here. So I'm looking just to take a quick little nibble on this to make a little bit of profit. But for all of you that are looking for a good entry, could it be the bottom? Could be. not showing signs of the bottom, but charts like this that are heavily oversold, you also will be tricking yourself into a bias. If I were to look at this, even without the TBO, without fibs, and going, oh, wow, it's down here at this level. Oh, man, like it went all the way up to this level. I can make 387% on this. Like that's a really dangerous mentality, because you're basically ignoring all of this price action. You're only paying attention to the current price and the high. And you're forgetting the fact that this thing is going up and down like to a crazy degree. Like this is like a roller coaster at Six Flags. It's awful, right? So you don't want to ride the ninja. You want to ride the beginning, or you want to hop onto a coin that's mooning and pumping like this, because stronger trends like this are much easier to trade. Even with a pullback of 34%, it still rallies up 180%. So I'm saying, like, it's really important to pay attention to the trend. There's no strong established trend on this chart, but there are signs that it could have a quick little pop up 20% or so. Will that be the bottom? I personally don't think so. But another nice thing that I like about this chart, Celestia, is that it was listed and put out on Binance 2023 November. I feel like it's been around a little bit longer, but it could be this new. But it hasn't seen a bull market yet. New listings have so much potentials, meaning charts that have been listed in the last month to 6 months, but charts that have not experienced a proper bull market, these ones have the most potential, in my opinion. These are charts that could, like this one, believe it or not, going back up to the all-time high isn't anything for a new chart like this, because it hasn't experienced a bull market. 350%, nothing. That's easy. Going up here, that's reasonable. Then we start to get to some silly numbers. But to be honest, Chainlink has done this. Cardano has done this. We saw Solana do this. We've seen BNB do this. Like, we've seen so many tokens that were new, have these big pumps, they fall down, and then start to rally. And in the right conditions, in an up year, in a top year like we are right now, we can see these charts that haven't experienced a bull market to go absolutely crazy. So again, please don't interpret this as T is going up 12x right now today. It's not. But it's an interesting coin that has a lot of potential that people tend to like. And it's on exchanges with good volume, things like that, right? Sorry, go ahead.
Yeah, I mean, I like your analogy around the Six Flag roller coaster. It's a Six Flag roller coaster where you've also got the VC with a nice allocation. You could also, if you know tiers like, you know, tokenomics and, you know, what it's been through over the past year. Yeah, on a fundamental perspective, I'd be very careful about going into this coin. But, you know, it's good to see that also you see similar things in the charts. But
I mean, we could also say the same thing about FTT, right? We could say the same thing about FTX token. Not FT. No, FTT. I mean, this is a coin literally with no team, no exchange, yet it's pumping, yet it's moving, right? We're going to get to a point in this market that, yes, this is the terrifying thing about crypto. This is why buying the dip can be scary. Yes, there might be a bounce, but don't count on it. But there will be a time in crypto where we see charts go absolutely crazy that have no right to do so, that are from defunct exchanges. Like, we're going to see crazy stuff happen this year. So even if the team, I don't know what's happened, honestly, with Celestia, but I just pay attention to the chart. If the chart is showing me that things are growing, things are bullish, things are looking strong, I'm going to go off of the chart. But that's just me. Yeah. But definitely do your own due diligence, all that fun stuff.
DUIOR, yeah.
Yeah. The last one I want to share with you guys is this coin, SmartX. Now, this one is, I should disclose that I've been holding this one for quite a while. I got into this coin way back over here on the left-hand side of the chart, actually before the price. So like way back down over here. So I'm net positive. Okay. I got nothing to lose. I'm happy with this chart. They have some great announcements coming with Chainlink and other possible things. They're on a couple of exchanges. But the main thing I like about this chart is the fact that it's, again, similar to Celestia in that it's a new-ish chart. It hasn't experienced a bull market. It's a decent product. And I feel like volume has died down significantly on this, unfortunately. But there are a lot of benefits to this chart as well. The main one being that when we had any sort of volatility in Bitcoin's price action recently, this chart only dumps like 4%, 3%, 2%. Like, it's ridiculous. Like, it's actually helped to hold this coin as a buoy against the volatility in the market in my wallet. Like, it's ridiculous. So that fact alone, it's been a really good coin for me to hold. Now, it hasn't always been like that. It's been falling for quite a while, and it made a clear bottom. So now it seems to be doing the inverse of what we saw down here. But one other thing that's really fun about crypto, I want to point out, is this guy. So this is what I call a predictive wick. So a predictive wick essentially is a usually not this big, but it's basically a wick that clears the order book, and it shows the market, well, the price wicked up here. So basically this is a big bullseye. This is a big target for SmartX. So I don't see SmartX having any issues going up another 70% to knock out that target. That's my opinion. That's my strategy right now. It's also near the all-time high. And again, for the reasons I just shared, like charts that are relatively new like this, that haven't experienced a bull market, they could go up a whole lot higher. So that's my strategy for this year. And then taking profits throughout the year, because Bitcoin will not go up into the right forever. Neither will SPX. Sorry, guys. Neither will XRP. Sorry, guys. Neither will SmartX. Neither will Celestia, SUI. There will be a bear market, and that bear market will be lasting for about 12 to 15 months. There will be massive drawdown for some coins up to 99%. So any of you that are just diamond-handed forever, have fun with those diamond hands and trying to open up a box of cereal, trying to brush your teeth with diamond hands. It's not going to work that well. You really do want to consider taking profits on the way up. Because if you're a trader and you're watching the Coin Bureau trading channel, it's about taking profits. How much? I'm going to leave that up to you, but at least have a plan for taking profits. That's all I'll say.
Wow. What a way to end, man. Yeah, DCA in and DCA out. That's all that matters, right? Because at the end of the day, screenshots, you can't buy that home on the hill with a screenshot, right?
Unless you can make an NFT out of it and try to sell it.
Oh man. Well, thanks a lot, Aaron, man. This has been fascinating, man. I really enjoyed this. I learned a lot. I'm sure you also thought so too, Guy. Absolutely. I think I'm now going to go hit my buys for SPX. And thanks a lot for all the analysis you guys are doing. Yeah. And hopefully we can next week we'll hop on a stream with Mariano as well to get some insights there. But yeah, hopefully we can do this again at some point, Aaron. And I'm also looking forward to that portfolio video. I'm going to put that into the calendar as well to watch the moment it comes out. And in case you guys are not subscribed to the channel yet, of course, hit that subscribe and hit that bell so you can get notified the moment Aaron or indeed any of the other traders do an upload. Thanks a lot, Aaron. It's been great, man. Yeah. And hopefully we do one again soon.
Yes.
Cheers, guys.
Fun. Thank you.
Absolutely. Thanks again, Aaron. All the best. Thanks for watching, everyone.
See ya.
Cheers.